Hello, everybody, and welcome to our panel for the day regarding fighting financial crime, the use cases of AI, KYC, AML, and fraud detection. I'm your host, Shiwan Yap, and for this panel, moderating the panel on financial crime is Ms. Danielle Jiang, an Assistant Director of the AI Development Office at the Monetary Authority of Singapore, Singapore Central Bank. She looks to positively impact the financial technology sector with contributions to data science as well as a means to empower financially intelligent decisions among consumers. Danielle, the stage is yours.
Thank you very much. Hi, everyone. For collaboration with us so that we can actually bring everyone a great content and insights from industry to share more experience and knowledges in terms of use of AI in the financial services. So this panel is about fighting financial crime. We're going to focus on use cases of using AI in KYC, AML, and fraud detection. Today we have a group of industry experts from banks as well as RegTech companies. They're really from different parts of the world. So I will start introducing the speakers. Firstly, we have Matt who is the Banking Operations Risk Specialist, RegTech and FinTech Mentor.
Thanks very much, Danielle. Hi, how are you? Thanks very much for having me. I'm an independent operational risk and compliance consultant. I draw on 30 plus years of working in different countries and different organizations, mostly in the sort of COO and CRO domains, having spent 6 years in Hong Kong and 8 years in Singapore, now back in Australia, and also spent some time out of the main banks in working for some of the FinTechs and startups, and also some mentoring in the F10 program. So looking forward to our discussion.
Thank you. Next we have Alban who is the Head of Business Financial Crime Team for APAC from HSBC. Hi, Alban. Hello.
Hi, Alban.
I think you're on mute.
Hello, Alban. Can you?
Hello, Alban. Seems like there's a technical issues. It's okay. We'll go back to Alban later. So maybe we can let Matthew to introduce yourself. Matthew is a co-founder and co-CEO at Hummingbird RegTech.
Thank you very much, Danielle. It's a pleasure to be here. My quick summary of my background: I'm a former regulator under the U.S. Treasury Department, and then spent some time in consulting. Then got into the crypto space when I built the compliance function at a cryptocurrency company startup called Circle, which is now in the stablecoin space. And then launched Hummingbird about 4 years ago to attempt to make it easier for companies to deploy AI to fight financial crime. So excited to have this conversation.
Thank you, Matthew. We move on to Timothy from the FICO Compliance Solution. Timothy is a Managing Director focusing on AML solutions in FICO. Hi, Timothy.
Thank you, Danielle, and pleasure to be here. I take care of the compliance and financial crime business in FICO, Asia Pacific, and I've been in this industry for more than 15 years. A lot of projects and a lot of associations with AI, machine learning, new advanced technologies, and how to deploy them in customers in financial institutions. Happy to share some insights in this panel.
Thank you. Do we have Alban back? Let's just chat.
I think Alban will be rejoining us. He's just had some issues, but he'll be rejoining us in the next few minutes.
Sorry, I'm back. Can you hear me now?
Okay, so maybe we can move on. Maybe hopefully Alban will join us back. Firstly, we would like to look at the overview of AI adoption in fighting financial crime. We have experts today from US, from Singapore, from Australia as well. So we just wonder what have been developed or is under development in this area using AI or advanced data analytic technology to fight financial crimes. So we can probably hear from Matt first.
Sure, thanks. Yeah, I think it's been, really interesting. Historically, the solution for compliance and AML and what have you was to throw lots of people at the problem and deal with manual processes, and that was okay because in Asia in particular, a lot of resources are relatively cheap compared to other countries, but we can't just keep doing that, and we really need to get stakeholders on board, investment prioritized, so that these things can be automated. There's a lot of movement towards controls automation, but also the thing that I've been really pleased to see is the sort of growth of KYC and AML screening tools that have popped up through the FinTech and RegTech space in the last 5 years or so. It's amazing to see just how fast that has grown and been adopted as well, and being able to open bank accounts, for instance, without even going into a bank these days is quite normal, where it would always have to go into a bank before, and seamless as well, very, very quick, and particularly with governments getting behind it as well and doing things like my info ID in Singapore and other similar things in other countries allows very quick adoption of and sharing of that KYC information.
Great. How about from US side?
I think the US is lagging a bit behind in the application of AI. There's a big regulatory focus on model risk validation here, and a lot of concern around black box algorithms being used. So in the banking space, there's maybe more limited application of AI, but in the fintech community, especially large international fintechs that are based here, they are doing a lot of internal development with data sciences teams and deploying homegrown tools. So there's a pretty big split here, I think, between more traditional financial institutions and in the fintech world. But I'm really hoping that the AI solutions that are being developed in locations around the world, like Singapore, and then that are also being deployed into some of the most sophisticated fintech companies that are headquartered in the United States, will become available much more widely.
Thank you. I think Timothy has been working with a lot of financial institutions on adopting AI in this compliance unit. Would you like to share?
Yeah, I think from the technology point of view, there's really been a lot of new technologies that's been appearing in the industry. Matthew mentioned some, and we've seen biometric identification, especially due to COVID, so everything is done remotely now. We've seen the burst of AI machine learning techniques like supervised, unsupervised learning. We've seen neural networks. We've seen cognitive analytics. There's really been a real burst of activity in terms of technologies that's being introduced in the market. But from a practical point of view, adoption has been kind of mixed in different markets. And Matthew mentioned some financial institutions. Maybe the take-up rate is slower in some regions. I think it's to do a lot with how do they operationalize it and gaining confidence, and how do you actually adopt it into your whole operations and process. So it's definitely a work in progress, but I think it's trending in the right direction.
I think that's a very interesting point, Tim, about the confidence. COVID has forced a lot of people to, into the digital payments and using digital payments, but also small businesses to get that sorted out as well has been quite an amazing leap, a leap of faith, if you like. But I think, we've got open banking as a very prominent change going on but in the UK the take up of that was very slow. It's going to launch in Australia soon, so be interesting to see how that goes. But in Indonesia and Singapore and Hong Kong, those sort of digital things people have adopted very quickly, I believe.
Yeah, I think what we've seen is kind of a 4 levels type of process, kind of confidence level. The first level would be where institutions tend to be more risk averse, so they stick to the traditional systems. And then they start to move to the second level where they have AI adoption, whether any of the techniques that I mentioned before. But it's kind of to complement, or to supplement the existing traditional systems. Once you move into a higher confidence level where you trust your results or output from AI a little bit more, you tend to make that predominant. And then finally, you move to kind of a level where you try to rely almost solely on AI techniques and results output to drive the systems. But I think it's most at the level 1 or level 2, because confidence is something that needs to be, at the industry level, whether it's the financial institutions themselves or with the regulators, endorsing or giving the green light for, widespread adoption of AI.
Yeah. Yes. So I guess it varies from countries and a different culture, and also the regulatory landscape as well. But definitely we do see the industry is moving towards adopting AI and a data-driven approach. Some of the audience may still try to figure out whether they should continue with the traditional method or they should adopt a new approach. Maybe any of the experts could highlight what is the key benefits the AI or data-driven approach can bring to the organization and compare with the traditional method. Why that is the trend, that is the future. Anyone could probably address that.
I can comment on this on controls.
So I think beyond some of the benefits.
Oh, Alban is back.
Can you hear me?
Hi, Alban.
Can you hear me?
Carry on, please.
Carry on.
Sorry. So beyond the benefit that Matt highlighted in his introductory comment, I think in terms of efficiency as well of the tools using AI. So when you're using AI, you are looking at a much larger data set than you would with traditional methods. You can actually encompass a much larger universe, which makes it a much better tool to detect potential money laundering. Also, AI will focus on sort of behavior rather than static data. So it's usually using real-time data and historical data to actually sort of, get to where it needs to be. AI also is usually predictive, which means you just don't sort of like in your KYC review where you decide that particular customers are going to be medium risk. It's not a prediction. It's just a bunch of indicators that tells you that maybe there's potentially a risk somewhere. So it's wasted time. Whereas the AI will be able to predict with relative accuracy whether a particular customer risk is increasing and whether that particular customer, for example, needs a review. So I think it's really around those 3 elements for me as an AML specialist that I see the AI contribution to the better efficiency of our controls.
I think another benefit is, MDs and business heads always would complain about the incredible cost of operational risk and compliance. And so if you can convince them to make a bit of investment in some of these tools and see some win-wins, that get some runs on the board, it's really going to enhance, rather than just having this giant growing teams of compliance people. They've really got to have that value-based discussion with them about making that investment up front and trying to get some of that and stop throwing people at it and throw technology at it.
Yeah, I agree. I think the efficiency and effectiveness mentioned by Alban is key, and also being able to detect the unknown unknowns. What you set out rules, or you basically are setting out things that you expect to detect, and this is where AI comes in, because with its more intelligent profiling, you have a deeper understanding of the customer, a more 360 view across static and dynamic information, rather than just being restricted to just static view of the customer.
I think that's a point that is important for all of us in the risk disciplines when we're pitching this to the rest of the financial institution that we're working with. This technology, now, we're normally used to screening for bad activity. And I think one of the keys to an effective application of AI in this space is developing an understanding of what your normal good customer behavior looks like. And then you can start to screen for anomalies from that behavior. But one of the most important impacts of that then is you can give a much more positive customer experience to your good users, because if you can recognize that they're doing something that is normal and expected, then you can avoid all of the potential false positives that they might have tripped under a more traditional rules-based system. So it makes you more popular with your marketing and sales teams, probably.
Great. And I think we see a lot of new business models in FinTech to actually providing new types of digital services to the customer. So maybe from Matthew, from your experience, because you're also working in a crypto space, which is something might be different compares with the traditional financial service model. Do you see any differences in terms of using AI in that space?
I think to a large extent, the crypto space has sort of forced a lot of innovation to happen in those organizations, because the normal monitoring approaches just don't apply. There's a lot of weird new things you have to account for in the crypto arena. I think one of the most important learnings that's been happening there is that as we mentioned before, the behavioral characteristics of this, and moving beyond more conventional transaction type data that you would be writing monitoring rules against, and starting to incorporate information from tools that might be used by the engineering team to track how people are interacting with the platform, like session data, how people are browsing through your app or your website. And discovering that there's a whole universe of data that can be applied in here. And if you overlay historical patterns of money laundering or fraud and test it against this wider pool of data, you can start to become much more accurate in targeting the suspicious behavioral characteristics of how the customers are interacting. The other piece of it, which is interesting in the crypto space, is you've got the ability to do blockchain analytics, where you can see the entire blockchain and all the money that's moving, which removes the difficulty of having to go through various correspondent banks to trace the flow of funds, but it adds in the whole pseudonymity aspect of it too. So if you're a data scientist who's interested in deploying AI in the AML space, I think crypto is the best playground you can go to, because it's very fertile ground for experimentation and a lot of opportunities to test and deploy new things.
No, that's interesting. So does that mean the AML practices will be very different from the traditional banking transactions versus the crypto transactions? I just wonder, how it is what is happening in the traditional, financial transactions monitoring versus the crypto. Maybe we would like to hear from Timothy on. I think you've been working with the traditional, solutions.
Sure. I think to answer the question, we first need to look at some characteristics of digital payments and crypto that Matthew mentioned. I think that is the main characteristics of anonymity, massive amounts of data, remote. You could be doing transactions from any part of the world, that places a lot of stress on the traditional monitoring systems that basically you still do handle over the counter. You have cash transactions to a certain extent. So the methods of monitoring still differ a little bit. And I think with the digital payments and the cryptos coming on board with the fintechs, I think the need for advanced technologies to be able to monitor in real time, able to handle massive amounts of data, able to track anonymity across borders, geographical borders. I think all these are things that need to be factored in when you're setting up a monitoring system. And how do you operationalize it? That means from the compliance point of view, when you have different sets of results that's popping up, how do you actually rationalize it and decide what is suspicious, what is not suspicious? Because the dimensions are very different for digital and faster payments as compared to traditional banking methods.
I think if I may jump in there, Tim, you mentioned earlier about trust and the different methods of monitoring, whether that's monitoring of customers' behaviour in transactions or even employees' behaviour in transactions. And I think we've got a new dimension. I think the MAS was coming out recently talking about increased concern about fraud potential amongst employees who are working from home, and with less supervision, maybe relax of some of the controls and what have you. I think we've got to be still we're in a digital world. We've still got to be enforcing the strict monitoring over the practices of what are they information is being exposed and who's got access to it.
Yeah, absolutely. I think with the remote world, it's probably here to stay for a while. I think interactions and transactions behavior over the internet would necessitate the need for better technologies in terms of monitoring. So I think it's going to be more rigorous on financial institutions to actually monitor and better understand their customers' profiles that may be happening faster and at a higher speed than traditional methods.
Yeah, I totally agree. I think I've been reading on the fraud transactions has been actually growing after the pandemic because everyone started working from home and maybe a lot of activities have been done online. So that's I guess in generally we all agree this is a great threat. But do you see maybe from that happening until now, what are the developments in the financial industry to actually adopting new techniques? Maybe Alban, you could elaborate more from your space. Maybe
Sure.
I think someone also mentioned about employee being working from home. So what are the new risks, new problems coming from that remote work, and what are the opportunities also for AI and data analytics?
Sure. So, I mean, there is increased collaboration in that space. I mean, for example, at HSBC, we partnered with Silent8 to do sort of automation and investigation and screening, just being one example. So I think this is, and we have a lot of internal developments in terms of using data visualization tool, creating network tools to identify network, risk rating tools, and so on, which leverage analytics and AI to a certain extent. So I think it's definitely catching on at the moment. For big financial institutions, I think it's really around sort of increasing the level of comfort that we have in using those tools and using them in parallel with existing controls. But I can foresee in the short-term future that some of our old control will be completely replaced by AI and analytics. I think what's interesting with the more things being done online is actually it provides us with more information about the client than typically somebody walking into a branch, because you have all of the contextual information that comes from being online, an IP address, for example, but also, behavior of the customer online. Where does the customer go after he's visited the page? Where is he coming from? How long is he spending on the page? All of that information can then be used in developing tools, for example, for fraud or fraud application, that can actually sort of help us fight fraud or financial crime. So, it is, I actually mentor startups with F10 and R3 business development, and some of the startups that I've seen that are working in that space, digital onboarding and onboarding through video, for example. I've seen startups actually developing behavioral analysis tool based on the images that the video actually capture to sort of get an idea of whether the customer is really who they say they are, and derive a whole bunch of information from that. I don't know if this is the future, but it's interesting that people are working in that space to see how they can maximize all of the amount of information that you can get through a digital connection.
Yeah, thank you. You just mentioned about the using of new types of analysis, for example, image or visual, kind of capture different aspects of the data of the customer. I'm not sure that is also an interesting trend in Australia or in US in the fintech space. And do you see that is the future? I would like to hear from probably Matt and Matthew. Is it because we do see that some of the this kind of fintech are doing that in Asia.
Yeah, I'll go quickly in for. I think what we're seeing in the U.S. is there are a lot of sort of point solutions that are helping out in different aspects of this. So video analytics, telephone analytics, email risk scoring, things along those lines. And they're all kind of fitting in as individual pieces of a more comprehensive whole. So in my prior team, when I was running the compliance function at the crypto fintech I mentioned, we ended up with 16 different vendors that were all plugging into our risk and AML stack. And that was feeding into a homegrown machine learned system that we had built in-house. We were doing things like image-based risk scoring, looking for unusual patterns of activity along those lines. So I think if I were to hypothesize what the future of this would look like, a lot of companies will have a sort of portfolio of specialized point solutions that are doing things like providing the video risk scoring, and they'll feed up into a more overarching set of algorithms that they have developed internally, and because they can kind of piece together components that are the best picture of the risk of their customers. And it's probably better with an in-house team doing it than any off-the-shelf vendor will be able to provide in terms of accuracy, since they'll know their customers the best.
Yeah, I think it's really important to allow that sort of entrepreneurial spirit and all of those fintechs and regtech players out there to grow organically, and I guess to a certain extent compete amongst each other as well. But you saw that in the Singapore in the digital payment space, where a lot of different players came into that space and offered new features and tried to challenge themselves to do things faster and more efficiently with KYC and those sort of things. But then at a certain point, the MAS came in with the sandpit, for people to go and play in, and I think that's a very, very important component. It's got some level of governance and oversight, and then eventually the introduction of the Payment Services Act, where that was giving, okay, the market has grown dramatically. We want to make sure that it has a certain minimum standard, and I think the same applies for these sort of KYC and AML. They've got to be meeting minimum standards that are acceptable across the industry. But you also don't want to, stifle the growth of the entrepreneurial spirit there.
Yeah, I just want to jump in with a perspective that maybe the regulator, as Matt says, plays a really important role in setting up the framework, especially what we've seen in some markets, even with new technologies, video, identity matching and all these. What we've seen is that only serves as the first stage of identifying the person, while accounts, actual transactions still need the person to pop into any of the nearest branch to validate their IDs with a teller, just a couple of minutes. But this shows that there's still some level of confidence that needs to be gained with such new technologies. And I think regulators do play a very important role in setting up the policies, the frameworks to give confidence to the industry in adopting this more widespread manner.
Good point.
That's a good point. And I think I totally agree with the speakers here that we will continue to support the innovation and that shouldn't be the key factors like stop those entrepreneurs from trying different new approaches. But of course, from the innovation, from the that starting creation point towards all the adoption, and harness the benefits that AIs and the data analytics, different tools to benefit the business. It's a long journey. So I guess we've been seeing a lot of startups trying different things and try to apply that in different use cases. But there's also from the maybe traditional financial institutions or from the business context, they are also coming, contributing to the thoughts or guide. That's a very good example of industry collaborations as well. So I guess there are a lot of challenges from the starting point towards, yes, we have a good idea and we can use images, we can analyze all aspects of the customer behavior, all the way towards, yes, we're going to use it on the processes of the financial services and integrate that to the business operations. So I just want to hear from the panel, what is the key challenges? Start from all these pilot projects all the way to adopt it towards the real business. What are the key challenges? And maybe you can share about your experience in terms of the challenges you're facing, or you faced before, and you could also share your experience, how you actually overcome it, or what is the solution, or maybe, yeah. Who would like to go first?
Sure, Daniel, I'll give this a go, and I will answer the question in the Q&A as well at the same time. I think one of the key challenges, the question is around model validation. How do we ensure that AI actually works in the ways that it should? And I think that's one of the key challenges is how do you build your model, how explainable your model is, and how you validate that model. And that's what takes a lot of the time in the initiatives that I've been part of, is really getting to that point where we feel comfortable that the model actually delivers what it should. And there are a lot of challenges there, data quality being one, but also the amount of data that you have. So if you're trying to train a model, for example, on SAR information, and you do not have a very sizable presence in that country, then you do not have enough SAR to actually sort of train your model to detect what a bad customer would look like. So there's a lot of challenges linked to data availability and data quality. And to the question, there needs to be a lot of I'm not going to say back testing, but sort of running in parallel the AI with your more traditional controls to ensure that the AI has at least the same coverage as your existing control and possibly extra coverage. And then you build incrementally from there to actually improve your model performance.
Maybe I can offer something from a project deployment perspective. So I think for us, it starts with the problem statement. What is it exactly the AI is designed to solve, and then the techniques are put in place. But I concur with what Alban mentioned about model validation. That's of key importance, explainability and all that. And I think that one key word that we often hear from financial institutions is how do you actually operationalize it? Operationalize is not just in terms of adopting the technology, which may, from a certain perspective, be the easier part, the more manageable part. But how do you actually put it into your whole operation process, where you still have some traditional monitoring systems, and if you have different results, say one says that it's suspicious, one says it's not suspicious, is there a framework? Is there some kind of policies, guidelines in place of how do you actually rationalize and decide how to proceed ahead? How do you do your investigation from such perspective? I think actually operationalizing it is actually where you bring out the value of the AI, whether it works as a complement, as a supplement to the traditional monitoring systems, and gives confidence to the whole organization and the executives that it's really working, not just from a technical model validation perspective, but from actually the whole operations and bring about efficiencies that can be actually measured.
That's a really good point. Aligning it with the risk appetite of the organisation and making sure that there's an appetite to actually engage with a lot of these fintechs and RegTechs is key to actually seeing some of the successes actually take place and benefits getting realised, but also managing the expectation to not expect a big bang or something to happen in 6 months, but for you've got to go slow to go fast. Make sure you've got quantifiable challenges that you're trying to solve, and that the AI that you're intending to put in is going to generate those benefits. But it's your point on operationalization is very true. It's quite difficult.
Yeah, I mean, and to your point, Mike, I think AI is a journey. And especially when you work with external vendors, it's not like you buy an on-the-shelf solution and you put it in and that's it, you're done. So that's not how this works. Design thinking and sort of iterative sort of building of the model means that this will have to happen over a period of time. You will need to bring in your SMEs to connect with the vendor and help them actually develop the model. It's not something that you just plug and play. It just doesn't work like that. Not yet anyway.
It's a very... Go ahead, Matthew.
We often recommend that companies implement weekly meetings that are cross-functional with the SMEs and alternate every week. So one week they'll look at situations where the models missed something that they should have caught, and then the next week they will look at things where the models, instances where the model flagged something that it should not have, and do a post-mortem in each case. And then in many cases they're running 2 or 3 different models in parallel and seeing which one performs the best. And that continuous improvement over time is really I think the key to all of this.
Yeah, totally agree. Because I think that's the differentiator between AI and the data analytics. Because the effect of the technology is really depends on the data and the business itself. And as we are in the everlasting evolving world, situation can change, data can change, everything can shift. So that will affect the model effectiveness as well. So I think this is also a great challenge that I see from the industry, and the whole process. I think I do see organizations have been putting in place mature kind of methodology framework to govern the whole process and make it more efficient and effective for AI adoption. So we're approaching to the end of the panel. I was actually have a curious questions on with regards to AML, because just going back to the topic is really discussing on that. I think when we start using really advanced technologies, the eventual goal is to fight the financial crimes, the activities, safeguard the business as well. And we do see, the bad actors also have the access to all these tools. They could also using, different channels, traditional or fintech or crypto, different ways to do perform money laundering or does the fraud. So I just would like to hear lastly from all the experts, how what do you think, how effectively we could, is it like collaborations between the traditional space and the new fintech space, or is it what are the things that you will see in the future you think the industry should go to actually better safeguard the business and fighting the crimes?
I think we've got to be promoting collaboration across the industry. And 10 years ago, the financial institutions almost had brick walls up against some of these small fintechs and what have you. That's changed. That landscape has definitely changed. But we've got to continue to promote that collaboration between, because of course they're much smaller and much more nimble than the big organizations, and putting the problem statements out there and letting people try and solve them.
Interoperability is going to be the key. Criminals are freely sharing information amongst themselves and selling techniques and selling tools. The advent of crime as a service, they all have access to the most cutting edge things out there. And if we're not able to share information in secure and privacy safe ways, we'll never be able to keep up.
That's a very good point.
And I guess that comes with the collaboration with the regulators and the police authorities as well, in terms of how do we exchange information safely, and maybe there is a central role here to be played by the regulators on behalf of the industry to sort of support the efforts that every financial institutions are sort of doing to try and prevent financial crime. Because without the complete set of data, it's actually only part of the picture that every bank gets, right? So how do you bridge that gap? That's going to be, I think, to Matt's point around criminal share freely information. We're a little bit sort of, running with our, legs tied if we cannot have the bigger picture. And that's where I think, I know the MAS has new regulation last year in terms of the amount of data that banks have now to submit to the MAS. But that's going in the right direction. We now need to find a framework as to how we exchange that information, how we get the feedback from sharing that information.
I'd like to offer just two quick perspectives. One is at a micro level. Banks and traditional institutions have got to understand their customers better. There's a lot of growing organized crime like FAAS, fraud as a service, and professional money launderers. These criminals those should be the targets of the financial institutions rather than just the petty criminals who commit just one-off money laundering activities. They should focus on the organized crime at a micro level. And at a macro level, I think the panelists have discussed that information sharing should be shared, should have a governance or framework, because it's not just financial institutions, but it's also including casinos, payment companies, cryptos, and all that. This information should be shared, and we need the regulator to moderate this kind of information sharing.
Fantastic. Thank you for all the speakers again for your generous sharing. It comes to the end of this panel. I will pass back to Shi-Wan.
Thank you very much, Thank you very much for that, Danielle. And thank you very much, Matthew, Matt, Timothy, and Alban for it's a very insightful conversation in terms of discussing the contours of this. Now, for those of our audience that would like to network, well, you have to get your coffee yourselves because virtual conferences are like that. But you can please join us in the lounge for networking and to connect with some of the speakers online. Thank you very much for your time, and thank you very much, gentlemen, and Danielle. Cheers. See you at the coffee. Bye.
Thank you.